What is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, we're going to be going over some macro market fundamentals that I sent to the CYPRX students, kind of giving my perspective on these two positions that I placed in the market on GBP JPY. Now, my trading days in the market are usually Wednesdays and Thursdays. However, because of some personal endeavors this week, I had to adjust. So I traded Monday and Tuesday this week. So we're going to be going over these trades, what I was seeing. Higher time frame, we'll go to the hourly, 15-minute, 5-minute, and then maybe my 1-minute executional positions where I was taking profit, the size of the position, both simply just 1-to-1 risk to reward ratios. Just looking for some pips in the market to start my week off. Again, because I usually don't trade the first week of the month. It's now the second week of May. So, 2% so far. Absolutely phenomenal. We'll get into that in just a little bit, right? So let me just kind of take your attention to the Discord real quick, just to kind of give you guys the analysis that I sent you all in the chat, the perspective that I'm holding in the market currently. Overall, for the past couple of months now, we've obviously, of course, seen a hawkish stance from the Bank of England that is set to potentially continue. And we'll get into that in just one second. And then obviously, of course, we've been waiting to potentially see a reversal in monetary policy stance from the Bank of Japan. Obviously, of course, that's going to be massive when that really does happen, because they've been in an easing monetary policy stance for over the past decade, I believe, if I'm not mistaken. So when that shift does happen, it's going to cause massive amounts of volatility, specifically on GBP JPY, and that's something that we've been paying attention to in the fundamentals for some time here at CYPRX. So I'm going to kind of piece all that together for you guys via the technical analysis that I laid out to you all in the private group chat, and explain to you guys again, based off of logic, a well-disciplined, planned approach, not only with our technical analysis, but psychology as well. And obviously, of course, piecing fundamentals together, all combined, how I was able to catch these two moves on GBP JPY the past 2 days. Okay. So I said to you guys, up here, bullish scenario first, obviously, of course, because we're seeing a hawkish monetary policy stance from the Bank of England. Higher time frame has been bullish on GBP JPY. So the best setups overall, trading in tandem with the order flow of the higher time frame, is buy scenarios until the policy decision stances from the Bank of England and Bank of Japan changes. I truly firmly believe that that is going to continue to be the case. Okay. I've even said to you guys, I firmly believe that the psychological level 173 is going to come into fruition before we see this reversal of monetary policy stances from both banks come into fruition. So we still have a little bit of a ways to go up into that psychological level. Now, the question is, what type of price action are we going to be able to react to in between that happening in the near-term future? Okay. So is price going to go lower from current price levels? Is price going to go higher? Again, like I said, I'm going to give you guys my perspective right now, what it was that I was seeing in the market, the analysis that I sent you all. So I said, as of time of writing price, currently sitting at around, when I sent this to you guys, the 170.200. Right now, we are sitting a couple of pips above that psychological level. Right now, above the major 500 psych level threshold. Okay. I also said to you guys, if we were to see a bullish continuation from current prices, we would need to see GBP JPY hold bullish above the majors 170.00, leading to a bullish break and a hold above the 171.00, as outlined in the purple levels above. And I'll show you guys that in just one second, and why I'm specifically focused on those psych levels. If bullish momentum continues above these two levels, we will most likely see a move into the 173.00 psych level and beyond. Okay. And then I said to you guys, on the downside, if at any time bears gain traction, overtake bulls at the psych level 170.00, just remember that psych level, because we'll get into that in just one second, and we get a bearish close below on the 4-hour or above time frame, we could be in for a significant pullback on GJ. That would give us a better discounted opportunity to take price back up to the 173 psych level. So I'm not saying that the 173 is going to come into fruition right now. We're going to be reactive to the market and not impulsively chase the market, and focus in on this potentially pullback perspective that we could have as well. All right. I said, personally, if the 170 is broken, the first area I'll be looking for price to come into or at a discount to is the 168 level that was created in the first week of May. That was last week. However, banks now looking to bargain in May may want a discount from where banks bought back in April. Okay, so I have those levels highlighted on as well. Therefore, I have the psychological level 165.500 marked off from where prices were at during the last week of April. And if at any time we see lower prices, I will be looking for discounted opportunities to trend follow the banks who have continuously been dropping prices and buying at a discount, taking prices higher pretty much all year. Okay, so if you go back and you backtest GBP JPY from the beginning of the year, you can clearly see what I'm talking about. I'm not going to do that for you now. Okay, you guys can go back and check that every single time prices tanked since the beginning of the year, the bank saw that as a buying opportunity and bought from a discount, driving prices higher. And that continuously happened, obviously, of course, creating this higher time frame bullish order flow on GBP JPY since the beginning of the year. Okay, so I'm going to continue to trade with that order flow until I see a potential shift in market structure on the higher time frame. So let me just kind of dabble into these specific psychological levels that I was showing you guys. Let's get rid of this. So we're on the 2 hour, okay? And the reason why I highlighted the 170.00 psychological level is because you guys can see, all right, this last bullish structural leg here from down here at the 165 up to roughly about the 1625, okay? This is the structural move from A all the way up to B. So this entire bullish leg of price action, right? And we can see that sellers came into the market here, but then they also came into the market at the 170 psychological level one time here, 2 times here, way to failure swing high here. Again, sell pressure at around the 170 psychological level. And since then, bulls have overpowered that sell pressure and are now, again, as of today, buying above the 170. So the reason why I highlighted this significant area is because if we want this bullish momentum to continue, we need to see buyers continue to flood into the market, driving price higher, again, breaking the 171, which is a high in the market, lower than this one. So obviously, of course, if we're going to continue bullish order flow, we need to make a higher high, which is why in the evaluation I sent you guys, the 171 right here was another significant level we need to see broken on GBP JPY in order for 173 to come into fruition. You guys can kind of clearly see my logic behind that. Then I said to you guys, on the downside, if the 170 does not hold where sellers overpowered buyers in the past, you guys can clearly see that buyers are temporarily in control of this market, okay? If sellers overpower this specific psych level, the first area that we could see price discount into is where banks were buying from back here, which is at this yellow dot at roughly around the 168.00. You guys can see down at the bottom of my screen, this is where they bought last week, Thursday in May. So the first week of May, I said that to you guys in the analysis, right? So again, just based off the ideology, we want to see price, if it is going to dip lower, discount into that area. We want to see price come down into at least 62% of where the banks bought from before, and then see buyers pick back up to take price higher. That's if we get that downside scenario play out, right? Further, okay, to look at further discounted areas, same thing here. I said to you guys on the higher time frame, because now this low and this low, if we went up to the 4 hour, 8 hour, and 12 hour, would be lows on the higher time frame. Again, confirming this entire bullish move from about the 165,500 all the way up into the 172,500, that entire bullish leg. So maybe I was saying to you guys as well, we need to be mindful. Could they come back down into a discount from where they were buying back in April? You guys can see here, this was a Tuesday, April 25th, 2023. And then could we see buyers pick back up from these levels? Okay, so those are just a couple of different things, scenarios that I was looking for, paying attention to. All right, now just to kind of solidify fundamentals with what it is that I'm seeing in the market, I'll go over a little bit of those right now. We see Bank of England, any hawkish expectations not met could lead to profit taking. So this is something that we need to pay attention to. Any type of potential dovishness or dovish expectations or any kind of bad fundamental news that comes out for the United Kingdom or for the Bank of England, obviously, of course, that would cause weakness for the Great British Pound. Okay. We also have right here, this was an interesting fundamental that just came out yesterday. Bank of England unlikely to disrupt the current positive pound performance. So again, be mindful, we're still seeing a hawkish Bank of England. However, what based off of past price action have the banks been doing? Dropping price to get themselves a nice discount on the higher time frame, then sending price higher, which is why I gave you guys the bearish perspective as well, levels to pay attention to in case we see that downside risk play out, right? We had the Bank of Japan, Governor Ueda speak today. I hope I'm pronouncing his name correct. Impact of recent US, EU bank failures on Japan's financial system is likely limited. Now, we also saw this as well. Bank of Japan, their April monetary policy meeting in minutes came out. Bank of Japan members supported the continuation of policy easing in order to achieve steady inflation while discussing over an exit from the ultra-loose monetary policy. So again, like I said, if this were to happen, it would cause a massive boost in price for the Japanese yen because, like I said, they haven't witnessed a tightening cycle in over a decade, I believe, if I'm not mistaken. Okay. It says Bank of Japan members conveyed that the central bank should consider weight of risk associated with the policy shift stance before consideration. However, one member stated that the Bank of Japan should prioritize the risk of missing the price goal due to a premature policy shift over the risk of shifting policy too late. So before this policy reversal takes place, I have a firm belief that these individuals, these elite bankers, are going to push price up into the 173. Well, then eventually they will find that that is a premium for them to sell and shift their policy stance. Okay, are we going to continue to go higher? Or are we going to see that monetary policy reversal stance come into play soon? And are we going to see GBP JPY sell off? We are being on the lookout, okay, for these potential news fundamentals to come out, how they're pricing all of this information into the market and being reactive market participants as price updates on a day-to-day basis. We're not marrying biases. We're not saying price is going to sell off from here. We're not saying price is going to skyrocket. We are intraday traders looking for opportunities to maximize our profit during New York session, specifically here at CYPRX, or at least the majority of traders do. Okay, so now let me show you guys how with those fundamentals put in place, psychological levels put in place, obviously, of course, my psychology put in place with my well-defined strategy and approach, which is only trading during New York session, during specific times, and avoiding manipulation windows. Let me show you guys how I was able to scale in at least 2%. It's actually a little bit more. It's like 2.5% for the month of May so far, okay, which is not a significant amount, don't get me wrong, but guess what? It's a sustainable income based off of siphoning money from this market, just based off of doing sound, fundamental, psychological, and technical analysis, okay? So I hope that you guys enjoyed that kind of little macro fundamental breakdown real quick. So let's go into my two scalp positions the past couple of days. I'm kind of upset at myself that I closed this one early because honestly, I was sitting there thinking to myself, they're most likely going to try and come up and grab these Asia highs, but it's all good. I was at the gym this morning and I was happy with the one-to-one that I got, okay? Again, you guys know my strategy. I told you all, I'm not looking for massive returns for the rest of the year. I'm just looking to consistently make a minimum of 7 to 8% per month, which I've done so far in March and April, and I'm headed to that trajectory for the month of May, okay? So yesterday, let's go over this position first. Again, I've already given you guys the macro outlook on these psychological levels, so you guys can see here that 170 psychological level playing out during yesterday's New York session in the form of discount. I was simply looking at, I'm just going to run through this real quick, where New York session was buying yesterday, two areas, okay? You guys can see here, they liquidated a low with this move here. They drove price higher, breaking all of this previous bearish market structure, okay? So we're clearly seeing bulls still in control during New York sessions. And then here again, we see pullbacks, higher lows being created in the market that lead to higher highs, okay? And so simply all I was doing was identifying those specific areas where New York session bought from. Just a simple generic overview. Again, looking to be a buyer at a discounted price from where a previous banking institution bought from. I was highlighting those areas and extending them over to the right-hand side. Same thing here, clone that. That's the second area where New York session bought from. that took price higher. So these were my two discounted areas along with the 170 psychological level overall, where we can see back in the past during previous Asia, London, and New York sessions, that psychological level played a significant role where sellers overpowered buyers. I explained that to you guys on the higher time frame already. So I was looking for the market makers to hold bullish order flow above that level during this New York session on the lower time frame. I was taking my Fibonacci from the second area where New York session bought from to the high, and you guys can see that price was at least on the higher time frame at a 50% discount from that previous level. Okay, so that was the higher time frame confluence. Now let's scale down to the lower time frame. We'll go down to the 1 minute real quick. All right, so what I was seeing from the 1 minute was that we had a whole entire area of manipulation in the form of equal lows here in the market that were created during Asia session and London session rollover. And we were respecting bullish order flow, or at least what I was seeing in the market from New York session at the time, okay? And potentially holding price above this major turning point where you guys can see here real quick, okay? Sellers came in, major psychological level turning point, buyers overpowered sellers and broke that entire psychological level, sending price higher. What just so happens to be that they created a equal low trap or an area of retail money where they're most likely doing what? Chasing the market late. Banking institutions bought from these lows down here or these lows down here, and they set up a trap of retail money here in this area. So I was looking at this level as a potential area where the market could push price down into to liquidate any people that were looking for positions like this and had open areas of stop losses in this market. Okay, so I was just trying to build liquidity in my mindset as to why price could be potentially discounted. So I waited for that. Okay, you guys know my logic surrounding New York session. Looking at the markets, if you're looking at where, let's go back up to the 5 minute. Okay, if you're looking at where New York session bought from the previous session, which was Friday session, excuse me, Sunday, Friday, look at where price action is at compared to. This New York session got past price action at a high. Okay, so this New York session in comparison to where it bought from and got past price the previous day is undeniably at a high. So with that logic in mind, banking institutions are not going to take price higher from here. No. They're going to attempt to at least profit before they buy. So what do they need to do in order to do that? They need to come down and accumulate orders underneath of lows and then buy up price, which is exactly what I was looking for the market makers to do. Okay, so I identified an area of liquidity. I identified that price was operating at a high. Don't forget the macro perspective that I've just given you guys, bullish above on the higher time frame, the 170, bullish perspective from the Bank of England, dovish perspective from the Bank of Japan. Okay, you guys get me? Kind of seeing how I'm piecing all this together, which gave me more confidence to take the trade once I saw the CYPRX pattern play out, which is, again, just to go over that real quick, all of those things combined, along with fractal technical analysis, which is a low in the market, a violation of that low, and then a move higher. That gives us a potentially well-defined risk to reward setup, stop loss beneath that liquidation event, waiting for profit to come down into discount and to take price higher, potentially looking for sellers or premium areas where we could take profit from. And all I simply did was wait for that to play out and scale in to a position. All right, let's go down into the actual entry. All right, I'll zoom in for you guys, 1 minute chart, just so you guys can see my execution. All right, so with all of those things in mind, remember, we have the higher time frame bullish. We have liquidity areas where the market could potentially come into and grab. We have psychological level majors. I would like to see price hold above, and I already told you guys and explained that, how there were sellers before at these areas, bulls pushed above that psychological level major, and I was looking to see price hold and maintain that pressure above that level. Now, also, we've concluded that New York session, in comparison to where they got past price action the previous day, this specific day on Monday got past price at a high. We know banks are not going to freaking buy from a high. They're not stupid. They need to do what first? They need to profit first, which means they have to tank price and then before the end of their session, look at this, before the end of their session, when they roll price over to Asia, then they buy after they've liquidated lows. Okay, you guys see how that works? It's kind of interesting when you actually understand how it plays out. Super simple. So then after that, all I simply had to wait was for price to come down into my area of interest, which was discount from that Fibonacci that I showed you guys on the higher time frame and the psychological level major 170, which it did. Then it started to play out the CYPRX pattern. Now, I admittedly entered a little bit too early, but I'll explain to you guys why. Okay, and also explain to you how I was able to manage the trade along the way and hold this price action through my stop loss. Okay, so you guys can see here that low that I was looking at. Let me zoom this price action in because now we're on the 1 minute. Okay, so here is that low that I was looking at price. We have a violation of that low and then a shift, or at the time, a potential shift in momentum that I was seeing. Okay, you guys can kind of see that. So I drew on my little structure break, right? I drew on potential areas of liquidity that the market makers could target next if they fail to target this low. And you guys can see where my entry was roughly at the around, I believe it was the 170, and I think I entered at the 254 to be exact, if I would just round this off. Okay, so my entry was right there. Now, what I was doing is I was taking my Fibonacci from the low fractally to the high that broke this fractal market structure lower high and getting in at a discount. You guys can see at least a 79% discount on the lower time frame. And I was looking for price to immediately run higher. However, what my reality was is that I entered into the market a little bit too early, which is okay. I was still following my plan. And the reason why I was able to hold this trade, let's measure this out, from entry to the time that it actually started putting me in consistent profit was about 1 hour and 28 minutes. Okay, so the reason why I was able to psychologically control myself from closing this position is, number one, I had a well-defined market approach, which is that overall my analysis consistently is shaping up with the potential bullish scenario to play out. So I wasn't battling myself psychologically, right? Number two, managing my risk by only risking 1% of my capital. Every single time that price dipped down into my stop loss, I wasn't freaking out like, oh my gosh, I'm losing money. Oh my gosh, I'm losing money. No, because the worst thing that was going to happen from this trade was I lose 1%. That's it. That's the worst thing. Nothing's going to kill me. Nothing's going to take me out as a long-term market participant. The worst thing that could have happened yesterday was I was going to lose 1%. So that psychologically allowed me to say, okay, I'm going to hold to what it is that I'm seeing in the market, say to myself, maybe I entered in a little bit too early, and then start to create an exit plan. I was looking at major psychological levels above the 0-0, which is something I teach you guys to pay attention to. So then that's when I tapped into the CYPRX strategy. Look at this, because here we see the major 200. So again, this is why I teach you guys the importance of major psychological levels. Again, you guys know what those are in GJ, right? So right here, what I started to notice is that we were creating an area of quote unquote retail support at this area where they were testing it, testing the strength of buyers, testing the strength of buyers, testing the strength of buyers. They tested it 1, 2, 3, 4, 5 times at this major psychological level. Then finally, what I said to myself is, if we break the 200, that means price goes below it. I want to immediately see price come back above it, which will signal to me that buyers are still interested at buying at this price. If it doesn't happen and we get a bearish close below, where we start to see lower highs and lower lows under the 200, that will signal to me bearish order flow under a major. And what I teach you guys is that if price breaks below a major, most likely what's it going to do? It's going to dump to the next round psychological level. So keeping those things in mind and having a well-organized, disciplined approach surrounding my risk management, I was able to hold this trade and logically allow it to play out. I even sent my screenshot to Justin. I believe I was talking to him yesterday while I was at the gym. These were my 2 take profit areas: take profit 1, take profit 2 above highs, simply just looking for a 1-to-1 risk to reward ratio. My stop loss was right underneath of the round cycle level, 170.00, was at like the 169.997. Okay. And I was simply just looking for a 1-to-1. And before price rolled over into Asia session, You guys can see that 1-to-1 was executed properly, firmly. I even got scared at the gym here because I didn't take profit. And I was like, look, these sellers, I was like killing myself. I was like, man, they just won't do it. They just won't flip. But then immediately after, literally 2 minutes, I saw that price was back in profit, and I was like, oh, we're good to go. And it smashed my take profit. And again, I felt good. I'm not sitting here chasing these freaking 1-to-11 risk to reward ratios. I'm approaching the market logically. And what it is that I'm seeing based off of my analysis is consistently working time and time again. Okay. And it has for many other individuals in this community. It's all just a well logical approach. You guys see how it's an entire package, right? Think about it. You know, you can clearly identify. People will be like, oh, all you're doing is hindsight testing. No, I mean, really think about the strategy that I teach. Look at where price action was at the beginning of New York session, which if yesterday you were trading New York session, you would have had all of this information to identify. Price is at a high in comparison to where price was at during the previous New York session. There's an area of liquidity, internal liquidity here in this area where Asia bought from and London bought from. We also know that higher time frames bullish. We also know that the Bank of England is hawkish and the Bank of Japan is dovish. All of those things in combination, obviously, of course, aside from manipulation in the market where they've dropped price lower to take price higher, signals buys are the best opportunity, right? And I was seeing that and I capitalized on that, right? So sound, simple market approach, that was Monday. Now let's go over today's price action. Like I said, I'm kind of upset at myself for not holding this all the way through, but it's all good. And the reason why is because this morning when I woke up, I literally said to myself, look at where they're selling from. They're selling, collectively speaking, not at a premium from where banking institutions sold from the previous day, London and New York, which means vice versa, right? Think about what we just did in the form of buys. They're setting up liquidity again above highs to come and liquidate that. And you guys can see now how New York is smoothly transitioning through all of those stop losses. Look at this. I'm going to blow your mind. As above, so below. Same thing that they did here in this area where they set up a liquidity trap. Same thing they're going to do here. As above, so below. Does it not look the exact same? Right? Liquidity trap. This is where they sold from. Push price up, right? Then they push price back down to grab liquidity. It's the same exact thing. As above, so below, right? Anyways, moving on. So kind of the same macro fundamental perspective. I'm not going to get into that. I just gave that to you guys. So leading into today, having all those fundamentals, now seeing price action for this New York session. I simply saw the pattern prior to the session. I know that the majority of students can probably say to themselves, oh, I see it too, which is right here during the London manipulation window. What was London session doing? London session was building liquidity underneath lows and above highs. Okay, London session came, cleared out that money with this massive move, this massive fake out move to the downside, and then bulls completely overpowered sellers. You guys can see here, they even left a equal high trap or a retail double M formation, these freaking dummies, right? The retail traders that trade M patterns and crap in this market, you can imagine early buyers underneath of lows, London session, and early sellers above highs. So there's your manipulation window right there. Once price breaks out of the manipulation window for London, we see the CYPRX pattern that I attempt to teach you guys play out, which is a low, a liquidation event that leaves behind a higher low, testing the strength of buyers that leads to a market break in structure. So this is bullish order flow, right? So we have to trade with that order flow until this order flow is disrupted, which means what? That this is the lowest point right here that we want to be potential buyers from. This is the second point that we would want to be potential buyers from. And look what New York session does. They get past price at a discount. What did I just teach you guys? If they get past price at a high, they're most likely going to sell. If they get past price at a low, where banks previously bought from, what are they smart enough to do? Buy, right? So what do? They buy at a discount. If you take your Fibonacci from where London banks bought from, let's just fib this low to the high and extend that over. You can clearly see that banking institutions during New York session were buying at around I'd say 90% discount, or the 1700 psychological level that I told you guys in the chat. if price holds bullish above, we're most likely going to see a bullish continuation, right? You guys see how it's all playing out. Okay, so I saw that bullishness continue. I saw this whole setup from London, so I highlighted from the lows, extended that over. You guys can see that that was my discounted area. Okay, then fractally, what I was seeing is I knew that I missed the bottom of the entry. This entry, lower time frame, simply same CYPRX confluences. You're waiting for the market to show you the willingness to take price higher after liquidating lows. All right, so we see a low here. We see the market violate that low, and then we start to see bullish order flow coming after. We want to see higher lows that lead to higher highs and higher low formations. Now, I noticed that price this morning was still doing this in the manipulation window. So again, New York session, manipulation window, we seek to avoid that. So I was being patient. Right when we broke out of that manipulation window, we created a higher high formation after having created the market maker pattern that signals to us that they have an interest and a willingness to take price higher and buy and target what? Again, we want logical target explanations as to why the market could potentially go higher. Well, simply all I was seeing was prior to the New York session, a whole, I know that this looks crazy right now. Holy crap, I got to delete some of this bullshit. Shit messes with my mind. Prior to the New York session, we were seeing a whole bunch of what? Trend line liquidity, right? You can imagine all kinds of retail traders trying to get in, guessing tops, right? Thinking that the market's going to dump, selling prematurely prior to New York session. Well, guess what the market makers did? As soon as we broke out of the manipulation window, we see that pattern. We broke all this previous market structure here. Simply all I did was I took my Fibonacci from the low to the high and got in at a discount. Now, I got in a little bit late because I entered in with a buy stop. So these two bearish candlesticks right here, I put a buy stop halfway through this bearish candlestick right here, because if price, in my personal opinion, was to overpower sellers at this area, again, we have a major psychological level turning point, the 170, price failing to push down, then we were going to create higher lows from this massive break in structure that we had right here and take price higher to come and execute all the liquidity out of the market above these sellers. So simply that was what I was looking for. My take profit one was at this third touch right here. And you guys can see that came into fruition again, just looking for a 1-to-1 risk to reward ratio. So simple market approach, not looking for freaking 10,000 pips every single day. Simple 1-to-1 risk to reward ratio is what I'm looking for to continue and thrive throughout the rest of this year in the market. Some days I might scale that, maybe look for a 1-to-2, 1-to-3. But like I said, I'm looking for 7% per month to continuously build my capital and potentially take the winter off this year. So yeah, any questions surrounding these two trade breakdowns today and my macro fundamental analysis and the psychological levels that I've given you guys?
That was a really good explanation.
Thanks, man. I try.